Welcome back to Investing Talk podcast. Today we're asking a big question, one that's definitely on a lot of investors' minds. Is Broadcom a good time to buy right now? We're going to look at this company from, well, pretty much all angles: its recent performance, where it stands in the market, future prospects, potential risks, really trying to give you a clear picture.
Yeah.
And hey, before we jump in, if you haven't already, please subscribe, like, and maybe drop us a comment. Also, if there's a specific company you'd like us to tackle next time, let us know in the comments below.
Yeah, and, understanding a company like Broadcom, particularly now, it's about more than just headlines. You really have to pull together different pieces: financial statements, sure, but also market buzz, future catalysts, the whole lot. It's about connecting those dots.
Okay, let's start unpacking this. Where better to begin than the financials? Broadcom's been making some pretty impressive moves lately. What's the latest data telling us about their health and growth?
Well, the figures really are quite striking. If you look at the two fiscal quarters ending May 4th, 2025, their net revenue hit $15 billion.
$15 billion. Wow. How does that compare?
It's a big jump, up from $12.49 billion in the same period the year before. That's not just a small increase, it really points to strong, accelerating demand.
That's significant growth in just a year.
Yeah.
And does that hold up if we look at the first half of their fiscal year?
It does, absolutely. For the 6 months ending May 4th, total net revenue reached $29.92 billion.
Okay.
That's up strongly from $24.45 billion the prior year. So it's consistent, not just a one-quarter blip. Real sustained top-line expansion.
And how does that revenue break down? Is it mostly hardware, or is software playing a big part too?
It's nicely diversified, which is one of their strengths. For those last 2 quarters, product revenue, think chips, was $8.51 billion. That's up from $7.19 billion.
Right.
But importantly, their subscription and services revenue also grew significantly, hit $6.5 billion, up from $5.3 billion.
So both sides are growing well. That balance must help.
Exactly. Growth in hardware and that recurring software revenue, that creates a much more stable mix.
Yeah, those software subscriptions, they're sticky, aren't they? And Broadcom's always had a reputation for high profit margins, right? What's behind that?
That's correct. Historically, they maintain very strong margins in both semiconductors and their infrastructure software. It's not luck. It comes down to their market leadership, proprietary tech, and the pricing power that gives them, especially for critical components. While we don't always get the exact gross or net income in preliminary reports, that history of efficiency speaks volumes about their profitability.
So for you listening, these aren't just numbers on a page. It shows consistent demand and a high-margin business model, a sign of real market relevance. But okay, revenue's strong, margins are good. What about overall financial health? Cash flow?
Yeah.
Debt?
They definitely operate with substantial cash flows, lots of resources. That's what fuels those big acquisitions like VMware and their significant R&D spending.
But acquisitions often mean debt, right?
Yeah. You're right, that's the trade-off. They do manage a high debt load. It's kind of baked into their strategy. Investors definitely need to check the latest balance sheet for the specifics on liabilities.
Got it. And how does that cash flow translate for shareholders? Dividends? Buybacks?
Historically, cash flow generation is consistently positive, very robust. And yes, that supports continued dividend payouts and share repurchases. In fact, they just confirmed the Q2 2025 dividend.
Okay, that's a good sign of confidence.
It is. It signals management feels good about the underlying cash generation.
What's fascinating here is how Broadcom keeps posting these strong growth numbers, keeps those high margins, and generates enough cash to reward shareholders and fund future growth. It really says a lot about their operational strength.
It does. Their strategic management is key.
Okay, let's pivot a bit. The tech landscape is fiercely competitive. What gives Broadcom its edge? What's its moat? And who are they really up against?
Well, Broadcom is definitely a top-tier player. And crucially, they lead in 2 key areas. Semiconductors, especially for networking and connectivity, think data centers, and also enterprise infrastructure software. That dual leadership is pretty unique.
So besides just being big, what are the specific advantages? Their secret sauce, if you will.
The scale is a huge one, gives them cost efficiencies, negotiating power. Then there's diversification. They're not tied to just one tech trend.
Right.
And critically, a growing chunk of their revenue is recurring from software subscriptions. That adds predictability, smooths out the hardware cycles.
That recurring revenue piece seems vital.
It is. Add to that a strong R&D pipeline, a huge enterprise customer base, lots of intellectual property. It all builds a very powerful defensive moat around the business.
Sounds formidable. But even with a moat, you've got competitors trying to cross it. Who are the main rivals?
Oh, absolutely. In semiconductors, you're looking at heavyweights like Qualcomm, Intel, and of course, NVIDIA, especially with the AI boom. On the software side, you've got companies like Oracle. And now VMware is part of Broadcom. So in a way, they're integrating a major player they used to compete with.
Interesting. So connecting this to the bigger picture,
Yeah.
that mix of hardware leadership and recurring software revenue really does create a strong defense, especially in a cyclical industry like semis.
Exactly. It provides a buffer, makes them more resilient.
Okay, so we've got strong financials, a solid market position. What does this mean for the stock itself? How has Broadcom's stock been performing recently, and what's the general market feeling?
All right, let's look at the price. As of September 4th, 2025, the stock closed at $306.10. So that's our benchmark.
And the technicals, what are the charts telling us? Uptrend,
Yeah.
downtrend?
The technical picture looks pretty strong right now. The price is trading above both its short-term and long-term moving averages. That's generally seen as bullish.
Okay. What about momentum indicators?
Yeah, the RSI Relative Strength Index has recently been in the 62 to 68 range. That's maybe mildly overbought, suggesting strong buying pressure, but not necessarily in extreme bubble territory. It might suggest there's still room, or maybe it needs a pause.
And the MESCD?
The MESCD showed a positive crossover back in late July, which confirms that upward momentum has been in place for a bit.
So technically, things look largely positive. How volatile is the stock? Is it a smooth ride or bumpy?
I'd say moderate volatility, pretty typical for a large cap tech stock. It moves with the sector, reacts to macro news, and definitely responds to its own earnings reports. Not super quiet, but not wildly erratic either.
Makes sense. And beyond the charts, what's the recent news flow? Any big announcements driving sentiment analyst takes?
Yeah, there's been quite a bit of positive news. Q2 earnings beat expectations, which recent filings confirmed. That dividend declaration we mentioned also helped sentiment.
Right.
And significantly, back in August, several analysts reiterated strong buy ratings. Consensus price targets for the next 12 months are mostly clustering around $310 to $315.
What are they citing for those strong buys?
Mostly the AI tailwinds. They see Broadcom as really well positioned to benefit from the build-out of AI infrastructure.
Okay, strong buy sounds good, but I keep hearing about valuation. Is that PE ratio a concern?
That's definitely the flip side, and it's a really important point. Yes, despite the AI excitement, the trailing PE ratio is high, over 108x.
Wow, 108, that's steep.
It is. It means investors are paying a hefty premium for those earnings, betting heavily on future growth. That makes the stock potentially more vulnerable if growth expectations falter even slightly. It's a valuation that demands caution.
What about insiders? Anyone buying or selling big chunks?
There was one sale noted. Director Justine F. Page sold 800 shares around $307 back on August 14th.
Significant.
Reports indicate it was a small fraction of her holdings, flagged as routine for personal liquidity. Nothing else major reported recently, buying or selling. So no signs of widespread insider concern or unusual activity.
Okay, so the market seems largely positive. Analysts are bullish on AI. But that high valuation is definitely something for investors to chew on.
Yeah.
All right, looking forward now. What are the big potential catalysts, things on the horizon that could really move the needle for Broadcom short-term or long-term?
Short-term, the big one is the Q3 2025 earnings release. That's expected around early November, maybe November 5th. The market will be laser-focused on whether they can keep up that above-trend growth.
Any product news expected?
There's anticipation around new networking and AI chips possibly coming out in 2025. Any announcements there could be a catalyst. Also, more technically, you've got ETF rebalancing on September 12th and potentially large institutional buys around the 20th, which could cause some volume spikes and maybe price swings.
And longer term, what are the bigger picture drivers?
Long term, it's really about two main things. First, the continued integration of VMware. The market expects significant synergies, more revenue, better margins coming through late 2025 and into 2026. That's huge.
Right, the VMware payoff.
Exactly. And second, just the ongoing expansion in their key markets, AI infrastructure, advanced data centers, enterprise software. Those are powerful secular trends they're riding.
Now, something really major just hit the news today, September 4th. A development involving Broadcom and OpenAI. This sounds huge. What's the story?
It is huge. Breaking news, really.
Yeah.
Financial Times reported today that OpenAI, yes, the ChatGPT creator, plans to start making its own custom AI chips from 2026.
Making their own chips.
Yes, and here's the kicker. They're partnering with Broadcom to do it.
Wow, okay. Why would OpenAI do that, and what does this mean for Broadcom?
The why seems clear. OpenAI needs massive, ever-increasing computing power, and they want to reduce their dependence on current suppliers, like, well, primarily NVIDIA. The FT report connects this to previous comments from Broadcom CEO Hock Tan about a new, unnamed customer placing $10 billion in orders. The FT identifies that customer as OpenAI.
$10 billion.
That's the reported figure. These chips would be for OpenAI's internal use, powering their future AI models. For Broadcom, this is massive validation. It puts them right at the center of the custom AI silicon trend for one of the biggest players.
What was the market's immediate reaction to this news?
It landed just hours after their strong earnings report, and Broadcom stock jumped about 4.5% in after-hours trading. Investors clearly see this as a major strategic win. The really important question this raises is, just how significant is this OpenAI deal for Broadcom's future? It could really solidify their role in building out AI infrastructure for years. It's not just the money, it's the strategic positioning.
Okay, that's a massive potential upside. But of course, every investment has risks. We need to talk about the potential challenges too. What should investors be watching out for with Broadcom?
Absolutely, there are definitely risks. On the company-specific side, acquisition execution is always one to watch with Broadcom. They do big deals.
Like VMware.
Exactly. Integrating something that large smoothly, hitting those synergy targets, avoiding unexpected costs, there's always execution risk involved.
What else specific to Broadcom?
Customer concentration has been flagged before. If a few big customers make up a large chunk of revenue, losing one or having one cut back could hurt disproportionately. And, they're still exposed to the semiconductor cycle. A global slowdown or dip in enterprise spending would impact them.
Okay, those are company risks. What about broader market or sector risks?
Well, the whole tech sector can be volatile. Things like rising interest rates, general economic worries, maybe increased regulatory pressure on big tech. All that can hit valuations and sentiment.
And competition isn't going away.
Not at all. Intense competition is a constant. Rivals like NVIDIA and AMD are innovating rapidly, especially in AI. That could always pressure margins or steal market share. So the key question for you as an investor is, how do you weigh these real risks against that really compelling growth story, particularly with AI and now this OpenAI news? It's a balancing act.
Right. So we've looked at the financials, the market position, the huge potential catalysts like OpenAI, and also the risks. Let's try to bring it all together. Is Broadcom a good buy right now? Based on everything we've reviewed from our sources, if you had to put a number on the overall assessment, it feels like an 8 out of 10. Let's recap the pros. You've got that strong, consistent revenue growth, very healthy margins. The recurring software revenue adds a lot of stability, almost recession resistant. Financially, they're solid, generating cash, paying dividends. They lead in key growth areas, especially AI infrastructure now, and the stock's technicals look positive. But then the cons. That valuation is definitely elevated. The PE is high, meaning the market expects a lot. There's still execution risk with integrating VMware fully. And they face those ongoing cyclical and competitive pressures. So putting it all together, the consensus seemed to lean towards Broadcom being better suited for a long-term investment.
Yep, it feels right.
The short-term momentum is there, yes, but the real attraction seems to be the fundamental strengths, the recurring revenue, the strategic moves like VMware and potentially OpenAI, making it look like a solid compounder over several years. Short-term traders probably need to be nimble, maybe use tight stops, given the potential volatility and that valuation. Now remember, our goal here isn't to give you investment advice, but to lay out the information, the context, the different angles, so you can make informed decisions that fit your own strategy and risk appetite.
And maybe a final thought to leave you with. The real challenge, but also the opportunity going forward, will be watching how Broadcom executes. How well do they deliver on these huge AI partnerships? How smoothly do they integrate VMware and unlock those synergies, all while navigating a tech landscape that changes incredibly fast? It's about constantly weighing that massive potential against the very real market and operational risks as this story continues to unfold.